Hey, good morning, options traders, and happy Monday, everybody. I hope everyone had a fabulous weekend. And last week, we got a really good question from one of the traders in the group asking about, and I think he called it a flipped condor, meaning that the calls and puts had switched places. But the technical name is a gut iron condor. And I know it's not the most attractive name for a strategy, but that's what it's called. But before I get into the details about what it is or why you would use it, I thought it might be helpful for everybody else to first back up. Let's talk about condors, iron condors, and gut iron condors to find out what's the difference. And once we iron these out, no pun intended, we can then talk about why we might choose one over another. So as always, before we get started, please be sure to click like and subscribe. It's greatly appreciated and definitely helps to promote the channel. So first of all, these can be very confusing, but let me show you an easy technique that will help you to understand which type of spread you're looking at. Go back to the basics of long or short. In the stock market and in the options market, it is a general format that the long positions are the buyers, and that's going to be the debit, and the short positions are the sellers, which will be the credit. Now this assumes that we have equal longs and shorts, so there's exceptions. If you have a ratio spread, you might get a credit, but we would actually call it a short position. But if we have an equal number of longs, in other words, long one option and short one, like our vertical spreads or butterfly spreads, condors, where we have long and shorts are in equal numbers, then this will be true. The long position will be the debit and the short position will be the credit. And that's going to help keep these different strategies straight. So let's start with a basic one of a standard condor. This is just your plain old textbook condor. It is always going to require 4 strikes. That's true for all condors. But the standard condor is built with all calls or all puts. There's not a mixture. And you're going to be long 1 strike, you will be short 2 higher strikes, and you're going to be long yet an even higher strike. Now they have to have the same expirations, and they're also equally spaced. So maybe they're 5 points apart in strikes or 10 points. Now there are some exceptions when we get into things like broken wing condors or butterflies or ratioed versions where these numbers or this condition about being equally spaced will not hold true. But again, we're talking about your plain, very basic condor. So a lot of times in the business, we write it in this kind of notation. And this just means that you're long the first strike, short the next one, and you're long this one. Now, we usually call these outer ones the wings, and the short 2, the center ones, will be called the body. For a regular condor, whether it's built with all calls or all puts, it will always be a debit. So, for example, let's say that you buy the $100 call, sell a 105, sell a 110, buy a 115. Notice that it's in the +1, -1, -1, +1 format. That would be a standard condor. But I could do exactly the same trade with exactly the same strikes, but just make them puts. It's still in this long 1, short 2, long 1 format. They are exactly the same thing. They will both be debit spreads, and they will both create this type of a graph. So notice that we have right here at our first bend, we are long the 100 strike, short the 105, short the 110, and then long the 115. Again, it doesn't matter if you're using calls or puts. It would be these strikes that we have chosen, and we would get exactly the same graph. Now, this is our expiration graph, which remember only applies, let's call it 3:59 p.m. Eastern Time, going into the closing bell. Today, however, that graph is going to look something like this. Maybe we have 30 days until expiration. 5 days later, we're going to shift to maybe this. 5 days later to here. Let's say 15 days to expiration, we're going to look like this. 10 days we move to here, and finally 5 days to here. So notice that if the stock is here in the center, in the body, that we will experience this position gaining value over time. That tells us that it is a positive theta strategy. It appreciates over time. But also notice we have this very sharp upside down U. we've got a lot of negative gamma here, and that can go against us very quickly as we get closer to expiration. And this is why it's wrong when traders say, oh, a condor is a positive theta or a premium collection strategy. Not necessarily. That's true if the stock is in this region here in the body. But what if you're out in the wings? Look at this orange line out here. It's more like a smile. That's positive gamma. It's negative theta. It's actually going to be falling this way as time passes. So the reason for that is that you're long and short options. Long options have negative theta, short options have positive. So it really depends on where you are as to how the strategy will perform. And then finally, once we get to expiration or 0 days to expiration, we then land on the black graph. Okay, so that's the quick overview of a standard condor, again, created with either all calls or all puts. What is an iron condor? Well, let's start with a long one. Anytime you see the word iron, whether it's an iron butterfly, iron condor, it is a mixture of calls and puts. So just if you hear iron, whether it's short iron or gut iron or anything like that, doesn't matter, you immediately know that the strategy is making use of calls and puts. We are going to have the puts on the left side and the calls on the right side. So if you are the long iron condor, you are buying the spread, and of course it's a debit. That's the basic definition that we looked at before. So in order for this to be true, in order for this to be a debit, the long positions have to be in the center. And this is what throws traders. We get this for a graph. It's exactly flipped. Notice we have our puts on the left, our calls on the right. That's what our definition says up here. But in order for that to be true and to be the debit, that this trade on the right must mean that we're long the 110 call and short the 115. That's just a bull spread with calls. It's a debit. If we're going to be the buyer of the spread, it also means that this must be a debit over here. We must be long the 105 and short the 100. So if you have two debit spreads, yes, it's going to be a debit. It is absolutely a debit spread. But notice that if you are long the iron condor, you don't want the stock to sit still. To get to this maximum gain area, you either need the stock to make a big move up out here to the right or a big move down out here to the left. It's exactly the opposite. So this is where a lot of traders get confused because they'll hear maybe again some of these YouTube videos, people talking about iron condors. And they typically want that standard condor profile because again, they all think there's something magical about it and it's positive theta and you're going to make all the money in the world for no risk. Definitely not true, but that's what they think. And so then they hear about this iron condor and they buy it. And they get on exactly the opposite side. So if you want this risk graph to look like the standard condor, you need to be the short iron condor. And that should make sense because you're just the trader on the opposite side of the long iron condor. And yes, we have puts on the left and calls on the right. But now it's going to be short. And that means you are the seller of the spread, and that means it's a credit. So your shorts are now in the center, which is back to the way the standard condor was. So if that's true, in order to make this a credit, notice what the left side has to be. We have to be selling the put spread. This is a bull spread, but it's a credit spread. We're long the 100 put and short the 105. What about the calls? Well, to get to the bearish side with calls, that also has to be a credit spread, which means we're short the 110 and long the 115. We have two credit spreads, so yes, it's going to be a credit when we execute the trade. But as always, please do not use this strategy just because of the word credit. By the time your broker creates a margin requirement because of the maximum loss, it's going to be an overall debit. But there are other reasons why we might choose it. But for right now, we're just trying to figure out which is which. So if you like this profile, which is what most people are after when they're a condor trader, and then they hear about iron condors, be sure that you are the short iron condor if you want this profile. So take a look at them side by side. Here's our standard condor that we started with. It is created with either all calls or all puts, and it is a debit. If you do the short iron condor, It's a mix of calls and puts, and it's a credit, but we get exactly the same profile. Okay, so now with that covered, let's go over to the gut iron. Now the gut iron is a short iron condor, but where we switch the calls and puts. So now the calls are on the left side and the puts are on the right, exactly the opposite. And if you are going to buy the gut iron, according to our definition, it means that you must be the debit. So what's the only way that we can create a debit spread by putting calls on the left and puts on the right? Well, on the left with the calls, this has to be a debit spread. We must be long the 100 and short the 105 call. It's just a bull spread. If we're going to be a debit spread with puts, our puts over here on the right, it must be the 110, 115 put spread. It's a bear spread with puts, so it's a debit. So again, we have two debit spreads, which means overall it's going to be a debit. But notice now we get our standard condor profile. So we've really just kind of gone through all combinations. We have some where the longs are on the wings, the shorts are in the center. Then we do the longs in the center, shorts on the wings. Then we do a mixture. We have puts on the left, calls on the right, and now we're just flipping them. So that's really what's causing the different variations. Now, a little side note, the term iron, it's not really known where that came from. And even more mysterious is gut iron. So I'm not sure where that came from. My guess is that when you use a gut iron, you are boxing in kind of the guts of our flying condor here, because notice that you are long the 100 call out here in the wings, and you're also long the 115 put. So think about it. If you have the right to buy at 100 and the right to sell at 115, that's 15 points boxed in. This is guaranteed to be worth $15 at expiration. And because of that, yes, it's going to cost a lot more than its standard condor counterpart. And that's why a lot of times traders shy away from it. And that's really a mistake, because there's some really neat things that we can do with the hedges, rolls, and morphs with the gut iron. But for right now, just realize that we are putting the calls on the left and the puts on the right. That's creating this box position, or the guts of the position. And that is going to be a debit spread. And again, I think that's what this trader was talking about when he said, I hear a lot of videos, people talking about this flipped condor. And I think this is what he was referring to. So just remember that the short iron condor is a mix of calls and puts, and it's a credit. We have the puts on the left, the calls on the right. But if we flip them, we're going to keep the same strikes, but we just make the calls puts and the puts calls. It is now a gut iron condor, and it becomes a debit. But we still keep exactly the same profile. So for a quick summary, remember that a long standard condor can be created with either calls or puts. It's a debit. We are long the wings and we are short in the center. If you buy or are long the iron condor, it's a mix. We're going to put puts on the left and calls on the right, and it's a debit. But notice that we have our longs in the center and the shorts in the wings, just the opposite of this. Now, if we do a short iron condor, should be no surprise that we're just going to invert this graph. So the short iron condor still has the puts on the left and the calls on the right. It's just the trader on the opposite side. And if you're on the opposite side of the debit trade, this must be a credit. So we've got the shorts in the center, we have the longs in the wings. So this would be a short iron condor. And then finally, if you want the gut iron condor, now we flip them. Now we have calls on the left, puts on the right, and it's going to be a debit. And we're right back to having our longs in the wings and our shorts in the center. So that's just a little overview of the differences between those three. I know a lot of people talk about these variations. So for our new traders, I thought that might be helpful to at least understand what separates these. Now for future videos, we'll take a look at why you might choose one over another. But for right now, please understand that we do not do a gut iron condor or a short iron condor because it's a fancy sounding name and somebody on the internet said that it makes all the money in the world for no risk. We do it either because of skews or because of the ease of the morph. It cannot be better, otherwise that would be an arbitrage. Might be better in some instances, but there's no reason to say, I only trade gut iron condors. So just kind of keep that in mind. So in the future, we'll start breaking these apart and take a look at some of the hedges, rolls, and morphs and why you might choose one over another. And so for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. It's all at optionsatoz.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.